Okay, everyone needs to sit in a room and decide that we need to bring back productivity into our agriculture, our natural sort of strength, and do whatever is necessary for that, as well as for bringing back manufacturing to Pakistan. Which means whether it's putting up steel mills, it's putting up plastic manufacture, chemicals, basic chemicals, etc., the whole works. So the entire focus has to be towards productivity, growing that, and obviously developing our human resource to match that. So it's a combination of developing human resource. By that I mean, first feeding people well, the basics of education, etc. I'm not looking for big degrees, etc., but the basics, because people who come into the workforce need to be able to on various ways of improving productivity, whether you're a farmer, whether you're a factory worker, or whatever else. IT and tech is nice, but if we have 2 million young people coming into the marketplace seeking jobs, I can't see 2 million jobs in technology being created. And anyway, as I say, it's a structure that we need to address. Unless we address those structures, it will be pointless my saying that this tax rate is bad, that's high, that's low. I mean, those are minor issues. To me, the structures are the key issues in what holds the entire economy back, including the capital market. It's not something that I have a magic formula for, but that's where all our people need to get together, put their minds together, and come out with the structural remedies rather than the tinkering which we
tinkering at the margins, which we see in every budget.
And then we get pressured by the IMF, etc., to do things, which frankly, I mean, we have a record of going to the IMF, so there's something wrong with that.
Hello and welcome to another episode of All Things Money. I'm your host Fatima Attarwala. Today we have a very distinguished guest. We have Nasim Beg, the CEO of Arif Habib Consultancy. Now, what sets him apart from most of my other guests on my show is his extreme experience. For example, he has been the one who set up the Arif Habib mutual funds. He's also been the author, the architect of Pakistan's voluntary pension schemes system. So his knowledge, the way it goes back from Pakistan's partition to now, and how the structural issues that are in this economy is affecting every single sector. That is what we'll be talking about today. Hello, sir. Welcome to the show.
Pleasure to be here, Fatma.
So, off camera, we were talking about back in 1947, the license Raj that was there and how it created the hybrid economy that we see today. Could you expand on that?
Yes. So we started out with was, let's say, a controlled economy where the civil servants, the bureaucrats controlled everything. Every business that had to be set up had to get a license, etc. And where you can put up that business, whatever, for example, you needed a factory. And the reason behind it was that we were very short on foreign exchange, which we continue to be, but nevertheless, that was the logic or rationale, that we are short of foreign exchange, so we can allow 2 textile mills to come up this year, and you would find the best suited people to run those textile mills and hand over the licenses to those 2 parties.
And
only those 2 parties. So that was the license Raj in a nutshell. Then as we moved to what we call the free market, etc., and away from license Raj, one critical issue remained, which is that all the legislation that comes out, whether it's to do with financial matters or with commercial matters, commercial industrial matters, it has one clause in there that the government can regulate whatever has been enacted. So that regulation is issued by what is called an SRO by the civil servant, normally to a degree influenced by the then government in charge, whoever is in governance. And so these are the critical tools for getting permissions, for getting preferential treatment, for doing all sorts of things. So for the average businessman, it is important to remain
In the good
connected, not just the good books, but be able to make sure that things happen what are good for the type of business I'm running. I need to make sure that there are no adverse regulations issued. And if there are regulations that help me or help my industry, those remain in force, etc. So it's a constant exercise of maintaining relations.
Maintaining relations with the government officials.
With the government officials, with the political persons,
Framework.
or whoever's in governance, so that it's collectively who can influence this.
So with the stroke of a pen can change a certain something that would affect the business.
Effectively that. Okay. So to make sure that I have my influence in Islamabad, I need to keep nurturing that relationship, which means I'll have to get my future generation also into the act, etc., make sure that they interact, etc., and continue this thing. I can't, as a businessman, leave it to pure professionals that they'll go do that, because those relationships are very special. They need all sorts of management, and which is what leads us into family-owned businesses and family-run businesses, rather than a very few that have now started leaving it to professionals, etc. And obviously, over time, there's been a lot of noise about these SROs, etc. So there's some degree of comfort coming through that it'll be not that so good or bad for a business, but you still have to do that. So it's an environment, a structural environment, which forces entities into remaining owner-run, and which is not conducive to a normal capital market operation.
So to sum up, because we have the license Raj, and to a certain extent, the government officials is the one who is controlling the business environment, it is essential for businesses to continue to maintain those relationships. And since the capital is maintaining those relationships, the businesses keeps being passed on generation to generation, even if they don't want it for that to happen. The structural setup of the business economy is such that it forces businesses to remain family run. Now, another thing that we were talking about is that Pakistan, like historically, has been short of foreign exchange. We've historically had high inflation rates too. Not just right now, not just past the pandemic, not just the Ukraine issue, but since independence. So how has that affected?
Okay, so there are two sides of it. One, if you look at the numbers, data from back, say, 1948, the first complete year onwards till now, there have been a very few years where there was an excess of exports over imports. So we were always short, which means somehow that shortage was being fulfilled, whether through loans, support, whichever way, aid coming in from the Western nations because we had aligned ourselves there, or other factors. And that has never changed. Yes, we've had post the early 70s and the sudden increase in oil prices, etc., then a whole new demand coming up for our people in the GCC region, etc., etc. So we've seen the growth of remittances, and they are a very significant part of our foreign exchange thing, albeit it's being it has two parts. One, it's people who could not be offered productive activity here. B, they're adding to the GDP of other countries. So it's welcome to have those remittances, but they don't do enough for us. So what happens is we are always dependent on remittances, etc., as well as the fact that when over time, we also had the taxation structures such that it promoted imports versus manufacturing, because there was a final tax regime. You presumed tax and you didn't have to worry about it. So more and more people got into that rather than into productive activity. And apart from that, some of the factories were converted into plots, etc., and sold off, which has another dimension of the plot economy, but we'll come to that. Nevertheless, what it happens is that as we start growing our economy now, because we are import dependent, we run short of dollars, and then we have that bust sort of come through. We have significant devaluations, etc., and that causes pain for the average industry. So any investor in the equity market sees this high volatility, and as a result of that. But not only that, throughout our history, we've the governments have spent more than they could collect in taxes, etc. So they always had deficits, etc., and which meant they had a high inflation because you finance the deficit. And on top of that, it means high inflation. So if you compare ourselves with India, the entire history, we've had much higher interest rates. Now, a high interest rate, you might think, will force people to go and raise equity to counter the interest costs. But actually what happens is when I offer equity in the marketplace and put a value on it, the valuation is inversely related to the interest rate. A low interest rate gives me a high earnings multiple on the stock price, and vice versa. So if I want a decent stock price, I need low interest rates. So as soon as rates start coming down, we start seeing some new issues, etc., come to mind. And whenever they're high, they force one to borrow expensive. It impacts the business, but it doesn't allow equity raising. And equally on the investor's side, if I'm getting 10% per annum or 12% per annum or 20% per annum, I'd be happily taking that, irrespective of what the underlying inflation is. I don't think of it that much as an average investor. I don't want to be in the volatile stock market. So that's one factor that has always hampered Pakistan's growth of equities.
So, summing it up again, Pakistan started off with a license Raj that led to a hybrid economy right now. So we have family businesses maintaining relationships so that the SROs don't harm the sectors that they're operating in. The way that Pakistan has historically had a license, Pakistan historically has a foreign exchange shortage. For most years since independence, our imports have been more than our exports, and we have been remittance dependent, which is more consumption oriented than production oriented. That's one thing. The other thing is that the structural deficiencies in our economy has pushed the manufacturers towards import deficiency rather than manufacturing locally because of the messed up tax regime. So every time there is a boom cycle, the imports go up, and then we are in a deficit again, and we have to print more money. And when we print more money to fund that deficit, we have an inflation environment. When we have an inflation environment, we have high interest rates. When we have high interest rates, if a company wants to raise finances for it to grow, it cannot go to the stock market because it has an inverse relationship. High interest rates means a low valuation. Low interest rates means a higher valuation in the stock market. But then again, we have the volatility of the stock market, which encourages speculative trading at times rather than long-term investments.
That's right. Okay, so the speculative trading is what has again been structurally forced on our people for two reasons. One, the wisdom in Islamabad and historically was that when there's a new issue, we must be fair to everyone. Everyone should have the ability to get. So it was a lottery system that you'll issue stocks, etc. And whoever got the stock, the few shares under that IPO, the lottery system, the first thing is that they'd sell off the stock the next morning because you got a nice price. So it wasn't an investing culture. It was a, lottery culture or whatever else one can get. So we've not promoted investments, but we did for a short period. When NIT was set up, they created some tax regimes, etc., which forced you into long-term investing. You couldn't invest for 1 day or 2 days. The tax breaks you got were locked in for 5 years, etc. And that saw the growth of the mutual fund, the first mutual fund, equity mutual fund, back in the 60s. So then we somehow lost our sort of route and thinking, etc., and came into this highly speculative. Then one other thing that has been done is that the brokerage houses are forced to effectively trade, and I'll tell you why. Because they are not allowed to manage money, etc., and say charge a fee on managing money like a mutual fund manager is allowed to. So for you to make money, you make a commission on each trade. So the more the trades, the more money you'll make. And if it's leverage trading, you'll make more money. But you have no other avenues. So for a brokerage house, it needs to see activity. If you were my client and I told you, here's a good stock, give you a good analysis, got you to buy it and told you buy and hold it for the next 10 years, I made my commission once. Now what happens for the next 10 years? So you're kind of forcing me to have trading, and not necessarily speculative and good research-based, etc. That is the trading culture. So the longer-term investing cultures come through the mutual funds. It's now pretty good. I mean, after NIT, once we finally sort of had the private sector come in the early 2000s, it started to build up. It's a significant player today. But again, mutual funds have also had the benefit of being able to get institutional clients for their money market funds for certain tax arbitrage reasons, etc. So their focus on raising equity mutual funds wasn't enough, if I might put it this way.
So they were focusing on money markets, which is
that was the easy one because it's easy to sell. You don't have to worry about the risk aspect of it, etc. And if there's a tax arbitrage for someone, then that's the wonderful thing you're selling. It's pre-sold for you. While equity means you need to work a lot harder, explain it to people, do all of that, and obviously build a track record of doing a decent job, etc. So it's more challenging, albeit it's more lucrative because you can charge a much better fee on it. So the mutual fund industry started moving towards that, but we are still not there as yet.
So money market funds within mutual funds are more popular than equity funds?
In total size, they are larger, and a lot of that is institutional money, which really no, because of the tax arbitrage.
Because of the tax arbitrage. So how much do the companies save in tax?
It's not a matter of how much you save. It depends on the interest rate earnings that you have. It's for people earning more than a certain threshold. It's your personal tax rate, whether you're an individual or a corporate entity or whatever. But the dividends that are paid out of a money market fund are taxed at 15% flat. So it does, for the big players, it does tend to act as an arbitrage.
So the tax arbitrage in this scenario is that through money market mutual funds, they can pay a lower rate of tax than they would be paying otherwise.
Yes. But that's the wrong reason for investing in a fund. That's which is what I worry about. We end up doing things for the wrong, like we go sign FTAs with various countries, and then we find that we've done something that we didn't quite think of. For example, it's said that a lot of the imports from China, when you look at their export data versus our import data, there's a gap, and the gap represents under-invoicing. Okay, so to the extent that's true, that hurts your industry. So you get deindustrialized, which is what feeds into your foreign exchange problem and all the other things. So to me, these are structural issues that need to be addressed. It's not, budget aa raha hai, so give me this or give me that. That's not going to work. It's the structural issues that we really need to think through, understand, and decide, do we really want this controlled mixed economy? Because a controlled economy with private sector can have all the bad things happening as well. There's cronyism, there's a whole sort of types of issues that start evolving. So if we have to go away from that, either we go purely to the market regime, and people go set up businesses. Okay, Dubai has currently had a problem, but in the past gone and set up businesses. They don't need to have relationships with someone in the government. whether it's the sheikh or whether it's the civil servant, there's a set of rules. Go by, play by that, and you do well. Okay? Why should we not have a similar environment?
It creates an environment of exclusion. If I have a special relationship with you, then somebody else.
And as I said, it forces me to then have family businesses, family-run businesses. My kid may not even be interested in that business as much, might be interested in the arts, for example, but has no choice. You have to, to keep the family business going, you've got to go, learn the ropes.
And be known to the power players so that...
All of that.
So I used to be an analyst for Pakistan Business Council. We used to analyze trade agreements. So I remember for the China FTA, there were so many EHS codes in which we had gotten tariff reductions for us, but we were not manufacturing those products. Or China was not importing those products. So there was no point in negotiating those EHS codes in the first place.
Well, there's also...
In fact, the China FTA has often been blamed for destroying the local economy because of the influx of cheap Chinese imports.
The problem is, again, more structural. We have again a structural weakness in the sense that because the way our civil service is structured, where people get transferred from one ministry to another ministry to another ministry. You might be in the Ministry of Commerce today, you might end up in the Ministry of Religious Affairs tomorrow. Now, when you go and negotiate trade agreements, there's a huge team of specialists, and if it's China or if it's the US or other major, they have large teams of specialists of each subject, of each HS code, as you would say. Okay, and here we have one or two people trying to do all of it. If they've been in the Ministry of Commerce throughout, okay, they'll be reasonably well. And if it's someone who's been put in there who was in Ministry of, let's say, Water and Power or something else, that person will not have enough knowledge. I can't blame that person. It's the structure. So again, we need to build capacity of specialists in each area of governance. So when we negotiate, we know what we're doing, and we don't end up having issues that we didn't even realize we would.
But with all due respect, sir, when I was in PPC, I was almost a fresh grad. And if we could just analyze, looking at publicly available data, that these are not products that we are manufacturing, or these are not products that China is importing, there's no point in actually negotiating tariff reductions on these HS code lines. And I think that whoever the public
you were an analyst working there with a certain educational background. Now, if there's someone in the ministry who's not had that benefit.
So shouldn't the ministry have such
No,
people?
But this is what I'm saying. Because we have a structure where we keep moving people around, and rather than having a structured approach on building teams of specialists, you'll go to negotiate with China, there'll be a bunch of PhDs sitting in front of you. And we'll have a bunch of generalists. It's an unfair advantage they have. I'm not blaming our generalists. It's the structure.
I've also heard that sometimes the teams that go from Pakistan are not as interested in negotiations as they are in, say, tourism. That, some people behind the scenes have pointed that out.
Could be part of the reason, but I would say that bulk of the civil servants I've come across are dedicated people. They want to do a good job. But there are limitations into the resources made available to them. Okay, so that, to me, I mean, you'll always have exceptions. I'm broadly, the civil servants I've come across, they're decent people. They want to do a decent job. It's not like everyone's bad or anything. No, might be a few
bad apples everywhere.
They're there in every segment of society.
So if you were to look at the structural issues is what led to the hybrid economy, where we have the control economy and the free market. The structural issues is why we are import dependent and we have a frequent shortage of foreign exchange. The structural issues is because we have led to family-owned businesses, family-run businesses, rather than a more CEO type organization, and it is because of structural issues that Pakistan has not been able to always negotiate the best deals for the country with other countries.
Foreign exchange problems.
Foreign exchange problems. And again, even the long-term investment structure in the stock market, in the equity market, that too has been set up in a way that tax arbitrage is more attractive.
And apart from that, I mean, as I said, I had a passing reference to the plots. So, so basically, everyone feels, okay, see, I have to distinguish between construction activity, which is productive, it creates jobs, it creates something, versus holding a plot and creating wealth for doing nothing. Okay, now that's been a very major part of our investment thinking, that buy a plot or something. And buying a little home for a family is perfect, it's fine, you must. But buying a plot
just as a store of value that you will eventually sell to somebody who will do the same thing all over again.
But you've added no productivity to this
the fire economy is also a thing, right? That you have.
It's a part of that.
Yeah, you have 20 units, you sell 30, and then the files are just going
So a lot of the investment flows there, and then it's fuzzy tax area, it's the DC value, market value, the whole works, and even as a person who, let's say if I've inherited a property, I want to sell it, I'm being told you'll get X% in white, the rest you have to take in black. Now, I don't know how to deal with that unless I perforce do a hundi and find an arrangement to take it elsewhere or have some other arrangements for hiding it. As I say, it's a structure that we need to address. Unless we address those structures, it will be pointless my saying that this tax rate is bad, that's high, that's low. I mean, those are minor issues. To me, the structures are the key issues in what holds the entire economy back, including the capital market.
So right now we have the capital. We had this booming stock market for a few years, and then now the bears are in control again. So
not quite. I mean, we've just had a wonderful IPO, a record-breaking IPO, both in terms of valuation as well as in terms of size. So there is a lot of money sitting with people which they are willing to invest. Of course, in that IPO, there will always be people who've come in for the speculative thing, but there are many who've come in, and these are large players who've come in for buying and holding because they see value in a good company. Okay, and there have been several such issues. So it's not a bear market. Okay, the stock price goes up and down, but the fundamental thing is moving in a direction where there's money flowing to the marketplace. Okay, but there aren't enough companies.
Yes.
There are not enough companies for the reasons I've mentioned. Most companies are controlled by families to the extent of 70-80%. So not enough shares let out to the marketplace. New people are scared of coming to the market. They don't want to lose control. They're also fearful of the tax man, etc., etc. So they'd rather stay off the radar and not come into the public. So unless we deal with the structural issues, I mean, people shouldn't be worried about having to deal with a tax man. The system, I mean, with all the technology, I shouldn't have to deal with a human and then negotiate. At the end of the day, these are negotiations. So again, it's there's a demand on me which I feel is unfair, so I have to negotiate.
The tax rate?
Not the tax rate, whether it's generally taxable income or not.
Taxable income.
Okay.
I think right now, with the upcoming budget, the entire conversation has shifted to taxes.
No, that's always been so because of our structural problems, and we've not broadened the tax base, and we've kept loading the few captives with more tax on it. So those who are suffering will naturally want the conversation about that. But the broader issue is not only the tax rate. I mean, yes, the tax rate has caused people to become tax exiles, etc., etc. A lot of professionals out of here to leave and find other places where they're not so taxed so heavily. Those are problems. But the structural issue is somewhat different, where small businesses don't want to come to the capital market because they're too scared of the tax man. that they'll come into public. They don't. They'd rather just remain under the radar.
Which obviously prevents
which is
large
what
amounts
I say.
of growth.
But I don't worry about it in Dubai, even though there's a small tax. But I know I won't be hassled by anyone. What is the regulation? Is the regulation? I'd abide by that. I'm fine. So as I said, I don't need to negotiate with someone in the government in Dubai.
It is what it is, and you figure out a way to...
And out here, there's always that structural issue.
Cultivating relationships. So we talked about long-term investments in the stock market. Would you be able to comment on alternate investments? We have REITs, we have the crypto economy. So do you think that the crypto market competes with the Pakistan stock market?
Okay, let's just talk of the REITs first.
Okay.
REIT is a wonderful structure which documents real estate, whether for development or for being invested in rental REITs, etc., where like the Dolman Mall, everyone knows of. Okay, so it's essentially you've invested in a property which is rent earning, and over time it'll increase in value. But it's not a speculative investment. So it doesn't trade that much, but the structure is good for long-term investors.
But is there a secondary market for REITs?
As I said, most will buy and hold because they are the long-term investors. So they're not really willing to sell, but some will at times. But no, there's not enough of a secondary market because there are not enough such instruments in the marketplace. Then there is the development REIT where you feel that a lot of good money is made in property development, but you don't... As a small investor, you can't participate in that. But the development REITs are now allowing you to participate in that, and they're well regulated. So you're not worried that some developer will run off, etc., etc. It's very well regulated. So you're comfortable there. And then within those developments, etc., you also have that if they are, say, putting up an apartment block under a REIT structure, organized structure, then, and if you go and book an apartment, you're not worried about the developer taking off with your money, etc. So that's the good part of the real estate side of the thing. Coming to the cryptos, there's been these numbers tossed around, 20 billion of Pakistani funds in cryptos, etc., and this regulation will help it sort of come in there. My point is the 20 billion or whatever that number, whether it's 2 billion, 20 billion, I don't know, those are just estimates of people, is money that people wanted to hide from Pakistani eyes. Okay, that's why as you don't want to, whether it was ill-gotten, whether it's away from the taxman or whatever else, or lack of faith in the Pakistan economy, whichever reason. But those were a person's reasons for going in there. So by becoming regulated, you don't want to become visible. Why would I want to become visible? I'd much rather remain invisible. So, but yes, the crypto is again a speculative thing. It's not investing, but it's a speculative thing, and it does attract a lot of young people. So there will be trickles of that money, and they'll, but remember, there will always be those who like to speculate and make a quick buck and try and... But if someone puts all of her or his money into speculative trading, then you have the risk of it taking a dive, and we see this happen. Then you hurt. So yes, if my investment portfolio as an average, Gen Z young person, I would put money primarily into the mutual fund, etc. And maybe a small bit of it for fun, put it in cryptos or any other speculative trading for that matter. That's, whether you go into the commodity exchange or you do whatever else. It's fine to have a bit of fun, but use it as your quota for going to a casino. That this is what I'm willing to lose.
Okay, so when we talk about speculative trading, can you also comment on margin trading? जो बदले पे जो people buy shares.
It's not just बदला. देखिए, margin trading. If I'm buying shares and I'm investing for the long term, it should be out of my savings, and I shouldn't be in a situation where I'm forced to sell, because if you're forced to sell, these are distressed sale situations where the market crashes, and I'd put my savings into a good stock. But then when the market drops, for whatever reason, there's a war broke out, etc. There's nothing wrong with the company per se. The market drops, I get a margin call, and I don't have money, I'm forced to sell. So I'll lose money.
But there were, some time ago, there were a lot more news reports, rumors, LinkedIn posts that, margin trading is allowed for only a certain amount of percentage, but that the badle pe, unregulated, it was going many
It's
times
no longer
higher.
unregulated. The badla is history. The current...
It's not happening anymore, even
no.
under the radar?
Under the radar, if it's happening, one doesn't know. But then, no one can have visibility on people doing a transaction privately. I mean, if I have a transaction privately with you and I allow you to buy stocks worth ₹1 million by putting up only 100,000, that's between you and me. And if it takes a dive and you are unable to, you'll lose the 100,000, but it'll be between you and me. It's not a matter of the marketplace. But that you can't stop people from doing private transactions. But in the regulated space, there is no badla, so to speak. It's a regulated market. My reason for being against the speculative trading is a much wider thing as to how, and one really needs to take a lesson from the leverage trading of 2008 episode and how it impacts an economy. So when you have high amounts of leverage and underlying asset, whatever it is, prices move up, it in turn has, and the credit creation because of that is money creation. So when the reverse starts happening, it's money being pulled out of the economy, which is what stifles an economy. So to my mind, this entire structure needs to be rethought. It's bad for economies, is my simple way of looking at it. It's a whole subject in itself, which back in, after the 1929 stock market crisis and the recession that came into, or depression that came into the US, their Congress then enacted laws empowering the Federal Reserve, the central bank, to impose margin restrictions on stock trading. They forgot it in their books that they had that right. They've only used it, I think, once back in the late 1970s when there was that two events happened. The Shah of Iran fell, and the USSR invaded Afghanistan, and there was a huge disturbance in the marketplace. That's the only time I can recall the Federal Reserve Board applied its authority. Otherwise, they've kind of left it be. The idea was that they should really control the leverage trading, etc. It was a good thought back in 1935 or whenever they enacted it. And I think there's far more need today to make sure that we don't really go that route. To me, it's
very risky to go in leverage trading.
It's not a risky thing. It's a serious threat to the economy per se, not a few people who might get burnt in the process.
So, and this is my last question for the podcast. We have had structural issues through the entire history of Pakistan, be it the hybrid economy, be it the boom bust cycles, be it shortage of foreign exchange, be it the import dependency. If Pakistan was to start taking the first step to move away from our structural deficiencies, what would that first step be?
Okay, everyone needs to sit in a room and decide that we need to bring back productivity into our agriculture, our natural sort of strength, and do whatever is necessary for that, as well as for bringing back manufacturing to Pakistan. which means whether it's putting up steel mills, it's putting up plastic manufacture, chemicals, basic chemicals, etc. The whole works. So the entire focus has to be towards productivity, growing that, and obviously developing our human resource to match that. So it's a combination of developing human resource. By that I mean, first feeding people well, the basics of education, etc. I'm not looking for big degrees, etc., but the basics, because people who come into the workforce need to be able to, on various ways of improving productivity, whether you're a farmer, whether you're a factory worker, or whatever else. So, and then the focus needs to be on productivity, whether it's on the industrial side or the agriculture side. The IT and tech is nice, but if we have 2 million young people coming into the marketplace seeking jobs, I can't see 2 million jobs in technology being created. In any event, technology is typically not the productive side of it facilitates things. It doesn't actually produce agriculture or produce or manufactured goods, etc. It may assist in it. So we need to focus on that. And in a way, we are lucky that the US has gone the route of becoming inward-looking, and they're the ones who forced the WTO, etc., on us, and we shouldn't have any protections. I believe we need protections, but protections where you do not have undue advantage for a few. Okay,
so
that's
a protection, but not with the family-run businesses that have to maintain.
I'm not suggesting family-run, but not monopolistic power for a few.
That is what happens when they are family-run businesses and transactional
Not
relationships.
only if they are family-run, they can be otherwise as well.
Cartels
So
monopolistic.
like a lot of the government sector entities are monopolistic, they're not family-run, and that is what is the problem. Okay, so the monopolies, whether state-run or family-run, it's monopolistic, unfair competition. You need competition, but within the protected space. So it needs to be thought through. It's not something that I have a magic formula for, but that's where all our people need to get together, put their minds together, and come out with the structural remedies rather than the tinkering which we
tinkering at the margins, which we see in every budget.
And then we get pressured by the IMF, etc., to do things, which frankly, I mean, we have a record of going to the IMF, so there's something wrong with that.
Yes, absolutely. Thank you so much for coming to the show and
Pleasure.
explaining how historically Pakistan's structural deficiencies have created the many issues that we see today. Thank you so much for coming.
My pleasure. Thank you.